Well, I had really an interesting way to start today's show with you, Nicholas, but there's breaking news that we just have to cover. I don't know if you saw this or not, because I know we were both hanging out on Herbert's Spaces just a few minutes ago, but it turns out that President Trump called Canada and he said, "Hey guys, I know you want to be part of the Golden Dome. Your portion of it is going to be $68 billion if you would like to participate. But if you would become the 51st state, it's all free." And according to Trump, they've taken it under advisement. They're going to think about it.
Yeah, I'll take that with a grain of salt.
Anyway, I just thought it's just kind of in keeping with the entire week. My brain is bursting over this last week, and I think so far you and I are. I think we're kind of hitting out of the park right now with regard to some of our predictions. But today we're at 365 in the after hours. We didn't quite make it during regular trading, but we're above 365 in the after hours. I'm not sure how important exactly 365 is according to your technical analysis. Brian, that was his number, was 365, I know. But I did a little of my own looking around the way I do things, and it looked to me like anything over 360 actually might have been a breakthrough, which we clearly did that today. What are you thinking about being at 365, and am I getting closer to my 488 within the next 2.5 weeks?
Um, okay, all right. I guess we'll just get right into it.
Okay, let's do that.
Okay, so guys, I'm a bull. Let me start off by saying that. But I see potential for some bad news ahead.
Uh-oh.
Short answer, Randy, I think the answer is yes. But I don't know if it'll be sustained.
Mhm.
What I see, there's lots of cracks right now that I see. Like, forget about Tesla, just in general. In the economy, you're seeing a lot of cracks, especially when you look at what the bonds are telling you, especially when you look at debt. And we can go into more of this in a little bit if you want, but there's a lot of underlying currents going on. We also know that everyone saw what happened with BYD over the weekend. That doesn't that is more or less irrelevant for Tesla, right? That's a whole different segment, all that stuff. But what I think people should take note of is what's it indicative of? And what it's indicative of to me is just even more signs of a slowing global economy, which will inevitably affect Tesla because Tesla's part of the global economy.
Right.
So I do think that because of the near term excitement news FOMO that Tesla has, we probably will get to your 388 in the coming weeks.
Four,
Maybe.
488. 488.
Oh, okay. Then I say no. I
Oh,
thought you
okay.
said, yeah. I 400, maybe 420, I think. And I think we're going to start rejecting. Not because of Tesla necessarily, but because of what's happening in the macros. I'd be very cautious to see what happens tomorrow when Nvidia earnings come out.
Mm-hmm.
I don't think the stock's going to hold up, and I think Nvidia's results and their guidance could be something that really triggers a market sell-off. Mm-hmm. So I'd keep an eye out for that. But you are right that this, everyone's kind of looking at their own numbers or whatnot. But yes, like the 364 to 360, that is a very tough liquidity zone to get through. The problem is you have a lot of buyers and sellers in this region. But if you can break out of that to go from 365 really up to 400, it's almost like a knife through butter because there's just not a lot of resistance there from sellers.
Right.
So that's definitely possible. What my point of view right now is that Tesla is strictly trading right now based off of this excitement that's coming up. That is it. It's not on fundamentals. It's not on. It's not the market being healthy, in my opinion, because the market's not healthy right now. We see that, and I think we're just one thing away from having another major sell-off. Right now, I think if we get the news of the new vehicles, we get Robotaxi rollout, if all that goes smoothly, I think once that's baked in, you're going to see kind of a bull trap set up here. So that's kind of what I'm seeing right now. With that said, just to be clear, I still have all of my leaps. I've got a bunch of them. You know, as we've been talking for like the last 4 weeks, I've just been loading up. And odds are tomorrow I'll probably leg into some more leaps. Not too many, because I want to see what this NVIDIA results do.
Right.
And then depending on how that goes Thursday, I'll probably leg into even more leaps. Because what I'm looking for is that move to 400, maybe 420. But from there, I don't know. We'll have to see what's going on. But I'm really worried about the debt markets right now.
Okay. I'm
They're
worried
screaming
about
red.
I'm worried about the debt markets also, although Japan did take some actions today, which were helpful. And I think to the extent that Japan gets in there and helps it, I guess it turns out that Germany has now passed the UK in terms of being the largest lender out there of record. But so you've got all four of these, Japan, China, Germany, even more. You've got India and South Korea. All of these are pretty big buyers of our debt. I've mentioned last week, I don't know if it was with you or not, that I thought the president should get on the phone to these people who they're trying to curry favor right now with regard to all the trade stuff, all the tariff stuff, and just say, look, I need you guys to buy some debt. I need you to buy some more bonds. As part of this negotiation, if you show me some good faith right now, the world will benefit to the extent that our interest rates come down in the United States, makes the United States more solid as a country, the currency more solid. So it'll benefit you if this happens as well. We'll be a better buyer. Our economy will stronger, etc. I think that would be a conversation I would be having if I were him right now. It doesn't take much. Those 5 or 6 countries that I just mentioned all bought a little bit, and maybe if there's a little quantitative easing from our friend Bessent, we could maybe get those bonds into a 3-handle situation.
Yeah, I don't know. I think that I don't know if that's going to happen. It's optimistic, but I don't think, like, you don't hear a lot of people, like, I don't hear a single person talking about this, but right now the bonds are saying rate increase. I actually brought this up on our conversation last week, that's kind of where we're leaning towards. And obviously not today, but since we spoke last time, we definitely saw them jump up to where they would indicate a rate increase, not cut.
Yes.
So if you look at September predictions now for cuts, we are down under 50%, I believe. So it's not looking great. On top of that, the global economy is slowing down. We see what's happening with China. We see what's happening with Europe. I mean, hell, we see what's happening here in the States. So I don't know. I only bring this up because I know a lot of people are strictly all in and buy and hold. And I guess if you are, great for you. I'm much more of a capital efficient person. I like to, trade around my positions. I like to maximize returns. And to me, we're getting frothy here for, I don't want to say the wrong reasons, but we're getting frothy here without a true foundation.
So I like your idea about paying attention to what happens with NVIDIA today, but let me just throw out a couple of
Tomorrow.
thoughts with regard to the overall economy. So with regard to the overall economy, we're going to have, according to the people who are predicting the PCE for this Friday, we're going to have a 3rd month in a row where the PCE is flat. In fact, last month it was down, but this month they're saying it's going to be flat. We're still going to be at around 2.6 on the core in terms of year over year, or I think it's 2.6. on the year over year, but that'll be the kind of the outlier because the month to month has been great for 3 months in a row. So if you look at the 6 month PCE, you're going to see a really, really good 6 month. And according to the Fed, the 6 month is the one they pay the most attention to. So I think I argued over the weekend that with the PCE coming in, if it does, that's what's predicted. If it comes in that solid, that would give the Fed an excuse to say we can reduce now. We don't need to. The economy is doing okay, but we can reduce, so we should because we've got like zero. I mean, not even 2%. You're like talking about over the last 3 months, zero inflation. So why not take this opportunity to reduce? We can always put it back if we have to. Having said that, I don't think they will.
Yeah, okay. I was going to say I could tell you why they potentially wouldn't.
Yes, yes. Because it's the Fed, because it's Powell.
Well, okay, so if they cut rates, it will have a major impact in two major markets. Well, really three. You could say like our U.S. debt and our interest payments and all that, but put a pin in that. One, it would affect housing.
Mm-hmm.
I think I heard one of your videos recently. You're finally seeing what I've been seeing about the housing starting to slow down. Yeah. Yeah. See?
3.2% year over year as of this morning. Yes.
Yeah. So we're starting to slow down in housing. Prices are coming down.
What did I say after that?
I don't remember. I
I
only
think
listen to the
it's
stuff that
important.
confirms what I say.
I think it's important to know the second half. So I said that, yes, I see that right now housing prices are not dropping. They are the increases are decelerating. And that's what we saw this morning with the price chiller numbers. But what I also said is when the mortgage rates come down, it will all catch up by the end of summer.
Okay, so
yeah.
That's the point. That's my point.
Yeah.
The Fed doesn't want that.
Yeah.
Because that would be inflationary. And that is the biggest part of CPI
right.
is housing. So the second rates come down, unfortunately, that would be somewhat inflationary, largely inflationary. So that's one thing. The second thing is that if you cut rates, it's going to send the stock market higher.
Mm-hmm.
It will. Mm-hmm. That would also be potentially inflationary. The reason is because if the stock market goes up, people have more capital. People, like you get it. I don't need to explain this to your audience. The other problem that I see when that's why the Fed won't cut. But the other, I'm telling you, like there's lots of red flags I see, and it's not that I want to. Like I said, I have my leaps.
Right. Yes.
Honestly, if Tesla didn't have these things coming up, I would not have any leaps on the table right now. But the other thing is, this is the most expensive the stock market has ever been in the history of the stock market. Ever. It is the most we've ever had retail in on the stock market ever.
Yeah.
It is the most leverage that the stock market has ever had, meaning people are buying and trading on margin.
Mm-hmm.
These are recipes for disaster right now. And again, it may not happen. I may be completely wrong. All I'm saying is it's not exactly clear sailing. We have debt issues, bond issues. We have a global economy shrinking. The Fed has reasons to not cut. Even if they did, it could be more inflationary, and that could cause other issues. And then we have a maximum high in PE on the stock market, which historically is followed by an immediate crash. Mm-hmm. So there's just all these things that are just kind of not really lining up that just, I don't know, that gives me pause.
Yeah.
I don't know. What are you thinking with this? So forget Tesla. Just what are your thoughts on that?
So the last thing for me on the macro is still zero indication of spending cutting back other than buying houses, which is there's a good reason for that. But spending on day-to-day stuff, spending at Target and Kmart and at the grocery store, the numbers are still just fine. And according to the, again, expectations of the economists for this Friday, they're going to be showing that incomes are up nicely again for the fourth month in a row, and that spending is up again nicely. Not horrible, not big, not like 7% or 0.7% again, but on the order of 0.2 or 0.3%. So if those numbers come in again like that on Friday, I think we're going to be looking at a Goldilocks.
Okay, so let me play devil's advocate here. I don't think spending is good. I think it's a facade. Right
Oh,
now, do you know what Klarna is?
I've heard of it, but I'm not sure I even remember what it is.
It's essentially like one of these companies where like a payday loan, buy now,
Oh,
pay
yeah,
later
yeah, yeah,
kind of
yeah,
thing.
yeah, yeah, yeah.
They are like negative cash flow now, right? Which is a symptom for the lower class. And I get it. Like they're not the main spenders, but they are a big block because there's more people, there's more numbers of them.
Mhm.
So that's one thing. Two, we have record credit card debt. So yeah, people may be spending, but what are they spending? Debt. Where you also see record amount of auto loan defaults. We see record amount of credit card defaults. So yeah, sure, maybe people are spending, but with what money? Is it debt that they're piling into? Because if that's the case, it doesn't matter if people are spending. This is just putting lipstick on a pig.
Yeah. So again, the alternative to that is the numbers I looked at the other day was the, what do you call it? The auto loans that are in trouble are not the regular auto loans. It's the high interest rate auto loans. What do you call it? The I always forget what that word is. You know, like not your core auto loans. Those are doing fine. People are paying those off. It's the people that have the 12%, 15% loans. Those are the ones that are having trouble. Also on credit card debt, it's the new credit card, uh, incoming credit card has been fine. Month after month, it's been fine. It's under expectations uh, since the beginning of the year. Then what did we have this morning? A big spike in optimism on the consumer confidence scores. Big spike in confidence, going forward. To me, I'm claiming all weekend the opposite of you. I'm claiming all weekend that we are going to see the economy boom way sooner than anybody expected it, maybe as early as the middle of the third quarter, but certainly Bessent said the other day he thinks by the fourth quarter we could be looking at 3% plus GDP increases.
Okay, so you just chalked up my last
Oh, okay.
argument here. Consumer sentiment being very bullish, in my opinion, is a sign that we're at the
Oh,
top.
but it's been negative for the last 3 months,
In
four
the
months
last 3 months, the right move has been to
to buy.
think the market's going up. So
Okay, there
I'll
you
leave it at
go.
that.
All right. Okay, let's switch to Tesla then. So I have another theory because that's what I love to do, especially I love to bounce them off you. All right. So my theory is that there won't be this sell-off. Again, macro, some kind of news. Of course, there's going to be a sell-off. But in general, after we get the rollout, and assuming the rollout is fine, the first 10 vehicles don't run into too many things, and then we get maybe 20 vehicles out there. If all of that works fine in the beginning to the middle of June or however it's going to be, there will be catalyst after catalyst after catalyst in front of us. So it will be a constant pull are they going to put out 50 cars? Are they going to put out 100 cars? Are they going to put out 200 cars? Um, are they and still not have any problems? Are they going to is Model Q any good? Does it look great? Does it got the right price tag on it? Is it a good value? And then by the time you've got those out of the way, you're already going to be looking at Second City. When is Second City going to happen? When is that move going to take place? And somewhere in there, I'm thinking around August, September, latest October, you're going to have the second biggest thing of all, which is unsupervised. So you're going to have this constant big catalysts pulling on the stock. And sure, there's going to be ups and downs, but overall, I think it's just going to keep pulling it up. Now, I don't think we're going to 1,000 in August or September. Of course, I think we're going to 1,000 by the end of the year, because once unsupervised is done, you won't be able to find it'll be very hard to find a car to buy anytime soon.
I'll take the under on that one.
Okay, yeah, go
Yeah.
ahead.
I trust me, I want it to be true,
I know.
obviously. But I I think we have maybe I don't know, another month of upward movement. So whatever we can do next month, and then I think we're gonna be coming down for a little bit. I don't
So
know to what level. I'm not trying to predict any of that.
no.
I just
But
think we're
let me ask it this way: assuming that the economy and the stock market are still at least as risk on as they are now, we haven't had a dip in the economy or a dip in the markets in some kind of pullback, profit taking, or just exhaustion. So we're about where we are now, a VIX of under 20, something like that. And if Tesla doesn't have any screw ups major screw ups in the rollout, and if the Model Q looks decent, you still think July could see a pullback?
yeah, July, August. Yeah.
Okay,
Yeah.
a pullback based on fundamentals, just profit taking, selling on the news. What do you think? What?
So not to get into too much on my, my strategies for things, but
Okay.
if there's one thing, look, price going up and down, you can't say there's always regression to the mean,
Mm-hmm.
because as we know, in general, the stock market goes up and to the right over time. So the
Mm-hmm.
stock market has an upward
Mm-hmm.
trajectory over time.
Right.
What you can say, though, that does always have a regression to the mean is volatility.
Mm-hmm.
Always.
Mm-hmm.
Never fails. 100% of the time, book it. Volatility, whether it spikes or whether it's extremely low, will always regress back to the mean. Tesla right now has had volatility really low for quite some time now. It's actually the lowest I think I've ever seen
Mm-hmm.
for some time.
Mm-hmm.
So that is kind of another indicator that we're going to see something come up. Don't know when. I just know it's going to happen. And so, as someone who also trades, options, I like to be aware of that, and I like to take advantage of those things. So while right now I'm bullish, I got my leaps on.
Mm-hmm.
I am, strategically thinking about when to get in or out, and not get greedy. And if I get out at we get to $400 and we end up moving up to 450, I don't care. I'll take my wins. I'd rather take money off the table, because eventually we'll have a little pullback and rinse repeat, same
Right.
cycle.
Well, okay. So a little pullback, of course, I would always say, of course, so if we got to say 550 by the end of June or into July, no, I mean, I'm looking at 500 in June. So getting to 550 in end of June or early July wouldn't be a horrible shot for Tesla. So, if we're sitting around that 500, 550 range in July, and, and there's a good excuse, there could be definitely people that would take a pullback, and we might, go down 10% or something. That wouldn't be shocking. It wouldn't be shocking for me for the stock market to take a 10% breather, even if the economy was looking pretty good, because you just have to have those from time to time. So I was kind of looking at this again. I went back and I didn't do any actual research. I tried to remember back when the first iPhone came out that had the people lined up around the blocks, 3 days ahead with tents. I was at the iPhone 3, I think, that was the first one that had that kind of a situation.
Mm.
I don't.
I think it was just the first iPhone.
No, I think the iPhone. I don't think so. I think it was either 2 or 3, wasn't it? I don't know. Anyway, whichever one it was, we're kind of in that moment. The iPhone 1, we didn't have the kind of FOMO where Wall Street was aware of the potential. It wasn't until 2 or 3 that Wall Street was aware of the potential. I think even the dumbest person on Wall Street right now is aware of the potential of Robotaxi. They may not believe it's going to happen this year. They may not believe it's going to happen a million by the end of next year, but they're at least aware that this is a real possibility. It's talked about on CNBC at least once a week. Kathy Wood is on every other week talking about it. So they're at least aware that this could be a complete blowout of the fastest growing consumer product in history by a lot. 0 to 60 billion in a year and a half. I mean, there's nothing like that's ever been close to have happened in the past. So in sales, in revenue, probably 0 to 40 billion on profit in 18 months. If Elon's right, 1 million units on the road. So that's why I'm thinking that if we get a proper rollout, no big deals, and we're starting to see talk about second city, whatever, and or we've got a decent Model Q, at some point, Wall Street's got to say, I got to be in on this.
I mean, I think Wall Street is getting in on this. I just think Wall Street is also conservative right now because I think Wall Street sees what I see with a lot of these issues. I mean, it's not even like a secret. I mean, whether you're talking about Stanley Druckenmiller, whether you're talking about Jamie Dimon, I mean, hell, even the All-In podcast guys were kind of talking a little bit about what I'm talking about. You know, there's lots of people who are seeing some of these cracks. So I think for what it's worth, there's like, we're not going up right now. This wasn't retail. Retail is not moving the stock like this. So Wall Street's definitely seeing, and they're definitely getting in it. But I think they're kind of being a little measured.
Yeah. Okay. What was I gonna? Yeah. So I agree with you that no matter who you're talking to right now, everybody's worried about the bonds, and I think everybody on the channel knows that I started talking about the bonds as controlling the markets. I don't know, 18 months ago. You and I have talked about the bonds like every week for.
Yeah, I was about to say. I've said since before the rate hike started that the bonds is all you need to know or need to watch to know what's going to happen next.
It's the bonds.
You don't need a Fed.
You don't need them. 100%. Agreed. So I agree that the bonds is a real problem. I was pretty happy though today. The 2 years did well. They did not beat resistance. They sold out. So I'm not sure that there isn't plenty of liquidity for the bonds. I kind of felt like the Moody's and the bond market may have been talking to the Republicans last week saying, you guys need to cut this budget more. We want bigger, deeper cuts, and we want them now.
Yeah, Moody's they're a joke. They're so behind on everything. So that's I don't take them for anything. What was a bigger issue was last week when the 20-year auction essentially failed.
Yeah.
Right. So that's the bigger concern. And so, we'll see what happens at the next auction, see what happens. But I don't know. I would just keep an eye out for that. Randy, I got to ask you.
Sure.
You got this bullish prediction, 500, 488, June, all this. Feed me some stuff here. Like, well, tell me how are you taking advantage of this? And do not tell me you're just buying and holding.
How am I personally taking advantage?
Yeah, give me that insider Randy scoop. Like, what'd you do?
Man, I know
you buy Leap. What'd you do?
I don't know how personal I want to get, but I will tell you that actually my wife and I talked about it today, and we decided to stay right where we were. We just felt we decided to stay right mostly because of my age. Okay, not because we both agreed if we were 20 years younger, we might sell everything we own and put it in Tesla right now.
Don't do that.
No, but I mean, if I was in my 50s or 60s, I might, still have really looked to liquidate, some other positions and put it all into Tesla right now, because that's how strong I feel about what's going to happen. But given where we are, in terms of our ages and et cetera, we're basically playing with our children's money. So to
So let her
add
rip.
to add to their inheritance, right now it's more important maybe to maintain the overall general performance of the portfolio to make sure that it takes care of us if we get really, really sick or something like that, as opposed to worrying about whether our kids get X or 10 times X. Let them invest if they want to in Tesla right now. I've certainly recommended it often enough.
Do they? Do they invest in Tesla?
Uh, I think out of the 6 grandchildren, I think we have one at least that was, maybe still is, I'm not sure. Maybe a second one that is certainly considering it. It may have already started, but I don't ask them on a regular basis. I'm not that kind of parent. Okay.
Oh,
Yeah, yeah.
I will be.
You will be okay. All right. So let's see. I wanted to also talk to you about the comment. Okay, about the energy dominance issue. This has been so much at the top of the All In podcast, the B2G. I mean, everybody. The wealth or energy equals wealth formula, which I've been talking about since I was, I think, 21, has all of a sudden become a big thing. It's just as obvious as it can be. I think you and I have maybe even talked about it before, especially with your background in the oil business. Um, how do you see that part of it playing out, especially whether it's, I mean, let me just make a little more specific here. We've got nuclear. I just saw a video earlier today on CNBC where 𝐬𝐤, Oklo, something like that. That may be the wrong call letters, but they're a nuclear company in the United States. They're thinking they might get their first nukes up by the end of 2027. That's the earliest I've heard yet. Okay. So if the regulations go away and, like Trump has said, if we can there's plenty of cash, there's no shortage of cash. How do you think this plays out? Nuclear, solar, batteries, oil, gas, and Elon and Tesla's involvement.
So I don't know. It's funny you bring this up. And so everybody knows, Randy didn't give me the cheat sheet ahead of time. So
Oh, I should have, huh?
it's
No.
just no. I'm just saying, like, it's just when I say like this is funny. This is something I was thinking about this weekend. So this weekend I was thinking about these two things about the debt issues that I see globally and what it means. Is it something? Is it not something? How to think about it. Tesla in the stock market, what's happening here. I think, you've heard me enough say that I think we're getting frothy without any real solid ground. For Tesla, I think the only thing holding up right now is the news coming up. But then the third thing I was thinking a lot about is the amount, to your point, everybody's talking about this energy issue that we have, right? Especially 𝐬𝐤. 𝐬𝐤's been like just talking about this nonstop. But you've also heard Elon talking about it recently, even
Yeah.
more than he normally has. And it makes me think that he's working on a certain project that we don't know about. So I think Tesla will be fine. Musk companies will be fine for the long term, especially if he's thinking about it. He tends to be very, everyone talks about, oh, he's late here, he's late on that. Again, I always push back, like he's late on some things, he's early on other things, he's on time on some things. You just pick and choose. But something that he's always pretty much right on time with is he sees choke points ahead of time and starts putting operations into motion ahead of time. So when it happens, it's not a big deal. So he's been really good at that. We've seen that over time. So I think Tesla will be fine, and I think Elon's working on something, or is I think he's doing something. I don't know what. I'm not going to speculate, but I think he's doing something. As for the rest of the country, I'm not really bullish on it. I think oil is getting to a price where you're not going to see new investments or new wells at these prices. Actually, I don't even know what the price is today, but pretty much anywhere
60,
from 50. Okay,
60.
anywhere from $55 to $60 a barrel. A lot of these companies aren't going to be going out exploring and drilling new wells. What they're going to be doing is they're going to go recycle and what you call fracking, essentially directional drilling. So they're going to go to old wells and they're going to try to go directionally to try to find oil deposits. That's probably what's going to be happening. And so you're not going to get a lot more fossil fuels doing that. Nuclear, I think I hear what you're saying. I don't know much about what you were talking about there, 2027, but I think in general, nuclear is going to be way slower than what anyone thinks. I know Trump did this whole show and tell with all these people about, essentially to speed up process and stuff. I don't know. I don't really buy it. It's hard to buy any of it after you see what's happening with Doge. It's like, why would I believe any of this now? If Elon couldn't get something to go and move fast and people actually sign on, why would I believe any of this other stuff? Just my point of view. And then the bigger problem is battery manufacturing. So we don't have the refining ability here, and we don't have. You get into the same permits issue, regulation, going out mining. Like you just run into the same issues. So I'm actually really bearish when it comes to this. Outside of Tesla and Musk companies and Elon, I wouldn't be optimistic about anyone else doing anything. So I do think we have a problem on our hands.
So again, you think maybe Elon's got something up his sleeve. When I put all this out over the weekend a couple of times, people reminded me that Elon had said that space-based solar is not as efficient as Earth-based solar. So that kind of poo-pooed the idea of maybe space-based, which to me seemed like maybe the fastest way to get it done. But again, maybe it's not the most efficient.
No, well, how do you get the power back?
Is radio waves. So you get this is a definite thing. Brian's been talking about it on my channel for at least a year and a half, Brian Wong. So yeah, you collect the solar in space, you bring it down to Earth with radio waves, and then you collect it at that point, turn it into electricity. Now I read an article over the weekend that said that it was more efficient than Earth-based, but according to many people, many people said
I,
that Elon says it's less efficient. So I'm not sure.
I would I'd be highly skeptical about that actually working outside of a POC. But yeah, I don't know.
Anyway, it seems
Calling
like
me skeptical on that ever happening or working in any possible realm.
so it would seem to me like the most likely thing would be regular solar. We are, Elon already has, obviously Tesla already has a great depth of knowledge about solar. Maybe
There's
they
still a
would use
problem.
it. Yeah.
There's still a problem with solar. Elon's right on his math, but he's right. Like 100 miles,
Right.
by 100, square miles,
Mhm.
and you could power, everything pretty much. The
Right.
problem is transmission.
Right.
Okay, so it's the problem when it comes to solar is not necessarily scaling it; it's distributing it. And
Right.
so this is why solar doesn't really make sense in the way that he describes. Like on paper, it makes sense.
Mhm.
Solar makes sense if you distribute it and you had every homeowner have solar.
Mhm.
That flips the script,
Right.
right? That completely flips the script
Right.
because then you have individual people putting solar on their individual house. We
Mhm.
don't have a transmission issue because
Right.
guess what? We're as close to the problem
Right.
as possible. So now for what Elon's trying to do for his own companies, that's a different story, right? He can get close to the problem, to the source of the problem. The same way, I mean, you're going to see like all these companies like Microsoft and Amazon, you're going to see them solve their own problems for their own needs.
Mhm.
But
Mhm.
that's not going to manifest into everybody else. So if you have the ambition to do something, you're going to figure out your own problems and you'll generate your own energy. And you're not going to rely on utilities, but everyone else can be screwed.
So Elon says, though, he wants a terabyte himself. He wants 1 terabyte just for Elon. I assume he means for Tesla, etc.
And I believe he'll do it. I believe
Yeah.
he'll figure it
Okay.
out.
Okay. All right.
But everyone else will be screwed.
Okay.
You know, like Microsoft, Amazon, Meta, they're going to figure out their problems. Everyone else can be screwed.
So if Canada does become the 51st state, or even if they don't, we have postulated that Alberta would be the very best place to put these data centers, because you could drop the data centers right onto a gas field. You wouldn't need transmission lines, and you also would have the snow melt to provide cooling. So that was one of our ideas. The other idea was, again, Texas, because Texas also has gas fields. So you can drop the data centers right on a gas field, and have the amount of loss due to transmission lines or whatever dramatically reduced. What do you think about those ideas?
Well, you're skipping a really important step there. you need a lot of refining. So, and those aren't anywhere near the actual drill sites. So
if you're going to build the site, you build the refinery with, to do the, anyway, I don't know enough about it, but
that's not scalable.
not scalable. Okay, not scalable. All right. So nuclear, though, the SMRs appear to be, most of the SMR companies, according to Brian Wong and others, seem to be about 3 years away before this decision by the president the other day. Most of them were talking about having something in 2028. But now maybe if the regulations are smoothed out a bit, maybe we could see some SMRs faster. I don't know enough about this, but people were telling me over the weekend that you need to group them. You don't want to just put one SMR down, because again, you have to secure it. You have to do all these things. So you really need to group them. Do you know any more about it than I do? I don't know.
No, not really. I mean, I have a background in nuclear, so that much I know, but I don't know what the logic would be necessary for grouping it. If you're trying to get an aggregate amount of energy output, sure, but there's also an argument they made to be distributed.
Mm-hmm.
To kind of de-risk. You don't want to have one potentially have an impact on the other. It's just de-risking. It's the same reason that you have data centers distributed. You don't have all your workloads in one data center, right? You might have if you're in AWS, you have a US East, you have US West, and you don't want to be in both, or you don't want to be in just everything in one. You want to be distributed. But I don't know what the arguments would be.
The other thing I heard over the weekend from different, you probably heard it also from both the All In podcast, and then it was confirmed by others, as Diamandis confirmed it later, is that you have on these data centers, you've got really big spikes of use and then no use, and then a spike of use and no use. And so it really creates a problem for the power suppliers. This would seem to be a natural place for megapacks to go. The question is, to your earlier point, can we get a hold of enough batteries and build enough megapacks to even come close to solving the problem?
Tesla can for Tesla, or Elon can for his companies, obviously. But no, I mean, there's a shortage, there's a backlog. Like, there's no secret here. Like, there's infinite demand right now for megapacks, or not infinite, that's hyperbolic, but you get my point. Yeah, there's no issues. Yeah, so the issue is, to your point, can we get enough? Can we build enough? Can we get them here? Where are the batteries coming from? Is that a choke point? Is that a critical, what's the word I'm looking for? A critical supply line that China could use to cut us off. You get to all these questions, which could actually amplify the problem, because if the U.S. government fears that this could be a problem with China, or they try to use it to negotiate, and they say, hey, you have to buy batteries, that could be a whole thing as well. I don't know. See, we live in definitely the most interesting times because the problems that we have from a like we see where technology is going. I think as clear as we've ever seen it. And we also see the roadblocks and problems to those visions. And then we also see what are the only companies really that can do this? What kind of companies have the capital, have the resources, the abilities, the talent? There's only a handful, right? So you only have a handful with the talent and the resources, only a handful with the revenue, only a handful with the scale. We see the problem, we see which way things are going, and then you have all these other problems that you don't know what's going to happen geopolitically, with tariffs, with trade. It's just it's interesting because it's really hard to navigate it, but while it's as clear as it's ever been,
Mhm.
it's as unclear. I think
Mhm.
it's as it's ever been as well, which is
Well, speaking
really
speaking
hilarious.
speaking of having only a few companies they can get the job done, an interviewer talking to Elon the other day suggested that we end up with one less company that can get to those scales by merging X with Tesla. So,
Oh,
what did you think about that idea? I've had very different opinions on whether this is a good idea, bad idea, or just a neutral idea. What do you think?
I think it's an unnecessary um, thing to do.
Just
You know,
unnecessary. Okay.
it's I do not think it's beneficial for Tesla
Okay.
investors. I feel pretty strongly about that. I don't think XAI is doing anything that Tesla couldn't do on their own.
Mm. Okay. All right.
And I feel pretty strong about that. Now, Tesla may not choose to do it, but I would say that would be Elon intentionally sandbagging because he wants Tesla to use what XAI is doing. So that would be intentional. But I would venture that there's better talent at Tesla than at XAI.
Wow. Okay. All right. And so do you think that Tesla needs an LLM capability like XAI, or do you think that that just buying from X is a good enough solution?
Yeah, they can buy from X.
Okay.
LLMs are cheap. They're so cheap. The cost has gone to the floor.
Mhm.
It's so commoditized. It's stupid.
So just buy access to the capability from
Yeah,
their sister company. Okay.
yeah, it's cheap. And it's going to get cheaper.
All right. So now at the beginning of the program, you told before the beginning of the program in the green room, you told me, now, Randy, there's a few things I'm very opinionated on. And, you know, uh, and I'm not sure, 100% sure if we got to all of them.
I think we did.
Oh, we did. Okay. Okay.
Yeah, it's I don't listen. I know it's guys. Remember, I'm the one out of Randy and me. I'm the more bullish one because I'm the one that actually put my money where my mouth is.
Oh, there he
Right.
goes. There he goes.
So just
Okay. All
remember
right.
that.
Okay. All right. Go to BYD then. Let's start,
Wait,
everybody.
wait, wait,
Okay.
but,
Yeah. Yeah. Yeah.
so the controversial thing was
Yeah.
saying that I don't think that we're going to be going up for much longer.
Yeah. Gotcha.
We
Yes.
400, 420, maybe 450, but we are going to get gassed out here. And
Okay.
it's not necessarily Tesla.
Yeah.
I mean, Tesla's part of it, right? At the end of the
Yeah.
day, like
Yeah. Yeah.
fundamentals have to play in at some point, but the market is shaky.
Yep. Okay. And by the way,
Be aware.
you and I have talked about this many times before. I'm 100% in accord with you that, the PE the PE of the overall S&P can only get so far out past its skis unless it's expecting massive earnings from the next quarter. And
It's
even
not.
then, even then, it should. Anyway, so
Yeah.
before we go though, I do think we should talk at least for a minute about all the conversation around BYD.
Yes, sir.
I've already talked about it a little bit on the show, but their accounts payable is crazy horrible. They're paying their suppliers in like 270 days or some such nonsense. They apparently have been selling their own cars to themselves in order to create nonsense sales and then reselling those as used cars with zero on the odometer. They might be if they're
We,
doing that, they might be having other shenanigans that they're into, like loading up their dealers, and then the dealers are dying because they can't move them. And apparently, according to one resource, at least two of their dealership groups have declared bankruptcy. Do you think BYD is in trouble? And if you think they're in trouble, do you think Chinese government bails them out?
uh, okay, so do I think BYD is in trouble? Yes, not in bankruptcy trouble. Do I think if they got even close to that, that the Chinese government would bail them out? Yes, I do.
Okay.
Um, I mean, and that's
Yeah.
shouldn't be controversial. The United
Right.
States government bailed out GM,
Yeah,
right?
right.
Like, so um, let's keep let's keep our integrity here. Not you, but like to anyone who's
Yeah.
viewing, like,
Yeah.
those Chinese always saving them, backing them, manipulating. We did the same thing. Um, I think BYD is in trouble. They just have issues, right? Like every company has issues. Look, Tesla has issues right now, right? Tesla is going down on profits, on revenue, right? Like we're not going up and to the right now with our numbers. Look at the charts. Look at um what's his name, Stevenson's charts. Like they're not as pretty as they used to be. But so everybody's hurting. I think with BYD, it's the lower end vehicles that they're having issues with moving,
Mm,
and that's a symptom of what's happening in the global economy. We talked earlier about
right.
credit card defaults. We talked about Klarna and all those issues. So I mean, that's not just a idiosyncratic thing in the United States. This is global.
Mhm.
You're seeing that in Europe as well. So I think the Chinese market is struggling on their lower income side, and that's what these vehicles are that they're discounting. Now, BYD has a lot of different levers, all right? They're not just a auto company,
Right.
right? They're also a big battery company, right? They have many different levers. They're starting to get into autonomy, and I would say believe that they're going to. I don't want to say catch up to Tesla, but that they're going to be a player. They're not going to go away by the wayside, and they have the ability to put cameras and everything into their vehicles now, and that's what they're doing.
Mhm, mhm.
So I don't know when it'll happen, but I don't think BYD is going anywhere. BYD is essentially the auto company in China and really, really around the world.
Mhm.
If you think about it, they are dominating in Europe in many regards. They're dominating in South America in many regards, Australia, Southeast Asia. So BYD's not just going to go away. They're not Lucid, they're not Rivian, they're not Neo. They're a legit car company that do other things. They are the most Tesla-like car company out there,
Yes.
in my opinion.
Yes. Yes. Absolutely.
So I wouldn't bet against them, but they got problems.
Yeah. Yeah. Yeah.
And
I
honestly, I
said,
don't know an automaker that doesn't.
well, I said on my show the other day, though, I've seen this before in my career where a company outgrows their capital. It's one of the hardest things to recover from. Yeah, again, if you've got the backing of the Chinese government, you probably can recover from it. But if you outgrow your capital too much, you can end up with your suppliers just stop selling you, or if they don't stop selling you, they go out of business because they don't have any cash. So I've seen it. I've seen it over and over again. I've seen really good companies that the balance sheet wasn't there to support the growth. The margins weren't there to support the growth, but they kept on trying to grow themselves out of the problem. And then all of a sudden, one day, as you mentioned, a little bit of downturn in the economy, or one supplier says no more, and it's curtains. I mean, just they fold. They
Yeah.
fold like a. How does that fold like a bad tent? I forget what that's called. Anyway, I forget that saying.
Yeah, I don't know either. No. Feel like a blanket?
That isn't it. No.
Well,
Okay.
no.
All
Yeah,
right.
but what I would say though, just like it's very analogous to '08. In 2008, we had a financial crisis because of our real estate
Sure.
situation,
Yep.
right? And kind of goes back to bad debt.
Mhm.
China's having the same issue. China's been having that issue that they've really dragged out. Essentially, they've tried to blunt the damage and the pain,
Mhm.
when really they should have just taken their medicine and moved on, and they didn't. And just like with us, when we had that issue, this affected lots of different parts of the economy, right? And GM, for example, went into bankruptcy. Just like we bailed out the banks because they were too big to fail. Same with GM. It's too big to fail because of all the ancillary jobs and everything that go into it. BYD, I believe, has that same effect.
Sure.
So I do think BYD is too big to fail for China, just like Evergrande was too big to fail, right? I think it's going to be the same situation in China, but I don't think they're going anywhere. I think this is, like you can't be like Gary Black where who called it out? Warren Redlich called it out beautifully. He said it so concisely. It can't be that when Tesla cuts prices, that's bad for Tesla. But when BYD cuts prices, it's not bad for BYD. It's bad for Tesla, as well.
Yeah, right.
Like this is the height of bias.
All right. Well, you'll be glad to know that in the after hours, your and my leaps are continuing to do well. We are up 1.24% in the after hours to $367.40.
Oh, I didn't know you had leaps. I thought you were saying you don't have leaps.
Oh, I've had leaps.
Okay. All right.
In 2021, that's how I made my bones in the market for the first time. I made 33x on my investment in 2021. So using leaps, that's all I did. I was trading
okay.
today on
But
leaps.
so you have leaps on now.
I have leaps on now, 100%.
Oh, okay. Well, that's what I was asking before, and you said you don't want to do anything. That led me to think you're only in stock.
No, I have leaps, and then when my leaps get to, when they get a little too close to being mature, I just trade them and jump into another leap. Yeah, I'm always in leaps. Yeah.
Okay.
All right.
There we
So
go. Now we're talking.
yeah, 1.25%. So in the after hours, a total for today of 8.19 for the day, 8%. Holy mackerel. We do that a couple more times, you're at my number.
Yeah.
It doesn't take much.
Wait, what do you have till June 14th? Is that a cutoff date for you?
Yeah. If we haven't done it by June 14th. And then, last time when I said it was going to.
No more extension. No more extensions.
Last time, a couple of years ago, when I said it was going to hit 300 on a very specific date, like 6 months ahead, it got to 299.12, and everybody gave me grief on that day.
Randy, Price is Right rules, my friend.
Anyway, okay. So on the bonds, which as you and I both agree, it's where the action is. It's what we need to be paying attention to. And my bonds are, here we go. So after having a nice down day in the pre-market, we are up 1.2 basis points to 4.446. So your belief is, if I understand you right, you don't think it's going to continue down. You think it's going to stick. You think it's going back up. What do you think is going to happen?
Oh, I think yields are going up, bonds are going down.
Yields going up from here. Where's the top?
Oh, no idea.
No idea. Okay.
Yeah.
You just believe it's going up. Okay. All right. We have got oil very nicely sitting at $61.20, up 31 cents in the pre-market after being down in the regular trading today. And natural gas up 1.62%. But I believe that the $3.45 is a price that the oil industry is happy with. If it stays above $3, it helps them to be profitable on the fields where they're able to sell the natural gas spill off.
I don't actually know the break even for natural gas. I'm a wrong oil.
Okay, just the oil.
Wrong type of gas.
Okay. Yeah. Gold. Larry thinks it's going down. I think it's going down. It did go down, but it is rebounding a little bit. We're at 33.09. I think and you think it's going up for the same reason. Little protection. People.
Yeah. I mean, again, like the bonds, gold, Bitcoin.
Yeah.
They're all telling you something. All of them.
Okay. All right. I believe you, by the way. I believe they're telling us something, but in a way, and I know that, so do you know there's something called a bond vigilante? Have you ever heard of that?
Yes, of
I had
course.
never heard of that. No, I had never heard of that until the other day.
What?
So
What's
these,
his name from PIMCO?
oh, yeah, yeah.
Wow. Anyways, go ahead. I'll remember his
Yeah.
name.
So basically, bond vigilantes are people that are trading their bonds in order to send a signal to Washington or to send a signal to a specific situation, as opposed to trying to make necessarily money that day. And right now, I believe that's what's happening. I believe there's a lot of bond vigilantism going on,
Okay.
and that the Republicans need to get serious and either get a little more, get more out of that reconciliation bill that they've got there right now, or they need to be starting a second bill to what do you call it? Get the what's that called? Where the Doge stuff gets permanent,
Oh, codified.
codified. Yeah, but it's called rescission. They need to do a rescission bill, which also only needs 51 votes. They need a rescission bill to do rescission on the expenses that they no longer think that they should do, and Congress needs to pass that. So they either need to really take a bunch out of the first bill, or they need a rescission bill that they should already be building and showing the public. I think when that happens, the bond vigilantes will say, okay, that's what we've been looking for.
Yeah. Bill Gross, who I was thinking of.
Bill Gross, that's exactly
He's iconic bond vigilante.
okay. All right. I'm always ready to learn. I'm always ready to get something new. Okay, then we've got the dollar, which is up today. Obviously, that would make sense. And we've got Bitcoin flat, you'd call it, in the pre-market at 180. I'm sorry, no pre-market for the day, down only 187. That's flat for Bitcoin. But it's $109. So where to Bitcoin? You think that goes up also?
Yeah, it's 108,000.
I know. I was
Yeah.
shorthand.
um, I, I don't know. It depends on what the market's doing. I would say right now Bitcoin's up like this because we're in a risk on market.
Yeah.
Okay. But it's also because people, I think, are worried about our debt.
Yeah.
I think Bitcoin is probably the most overstretched asset class at the moment. But I don't know what's going to happen. I mean, during risk on times, things can just run and run and run. So you never know. Like you don't want to try to be the person that predicts the top, just like Tesla. Like I'm not trying to predict the top on, we're eventually going to pull back. I promise you we'll eventually pull back. To what? I don't know. When? I don't know. But it's not my job. I'm just here to tell you what I think is going to happen. But I think we've ran pretty high in Bitcoin, and I think we have less upside before we get a little pullback. And when that pullback happens, it'll probably be your signal that the rest of the market's about to have a pullback.
Okay. I like that. I don't know if I agree, but I like it. I like the analysis. I keep telling people it doesn't matter whether we're right or wrong on the numbers or even direction. It's whether the analysis under it makes sense. Okay, pre-market on the equities, we've got all three of them at 0.08 or 0.09, call it the same, up. So a little bit of a continuation of the rally today, but not much of one, not really a fantastic affirmation that the rally should continue at only 0.09, but directionally correct. And Tesla, of course, doing way better in the after hours than the equities are doing in the pre-market. So that would tend to tell me that some of that's FOMO. And we'll see if we can continue Tesla. If we do finish above 360, 365 tomorrow, well, let's say 365 tomorrow, whether that sets us up for 400. Do you think there's going to be a psychological barrier at 410? Because remember, the old all-time high was 410.
I think anytime there's like a round number, it's like 400, I would say is probably the psychological barrier, not 410.
Yeah. Okay. All right.
That's what I
It'll
would
be
say.
super, super. We're in the most interesting 30 days, probably in the how long? I started playing the market when I was 20. And well, I kind of futz with, I don't think I invested anything, but I was futzing around with it before that. But so 20, that's 57 years of playing the market. I don't think I've ever been in a situation this crazy exciting. This is going to be quite the next 4 weeks.
It really will be. So I guess what's your prediction? When does Robotaxi start? Will there be an event? Will there be an announcement? What's gonna happen?
Yeah. I think the Robotaxi will start very close to the first. It'll probably be based on what day of the week they want it to start, as opposed to being ready. I assume they were ready a month ago. They wouldn't have announced if they didn't think they could have done it like that day. So I think it's going to be what day of the week. Do they want to start on a Monday? Do they want to do it on a weekend? What do they really want to do? And I think it might be, maybe they'll do something like we used to call it, in retail, we call it a soft opening.
Yeah.
Okay, so you invite a few of your friends and your family and maybe people that you already know will be customers. You invite them in so that you can show them the store, make sure everything is working
Hmm.
correctly, the cash register are working, the credit card, everything's working nicely, and then you have a real grand opening maybe a month later. I think maybe that's what they'll do is they'll have a soft opening and then maybe not a month later, maybe it's 2 weeks, whatever. But at some point they'll announce, okay, this is the day the president's going to come down and cut the ribbon.
Yeah, I think it's gonna be like first employees and friends and families of employees, things like that.
Yeah. Yeah.
Yeah. But yeah, it'll be exciting. Yeah, I do think it'll start on June 1st. I think there'll be a big announcement, which is interesting because I think that's on a weekend.
Yeah, it is on a Saturday, I think. No, Sunday.
Sunday.
Sunday. Yeah.
Yeah. So markets could be crazy. Or wait, no. June 1st is on a Tuesday.
What? I'm really confused. Which calendar are you looking at? Let me look at my calendar.
The correct one?
Today's the 27th, June.
Am I
I'm sorry,
wrong?
May.
Am
31st
I
is
crazy?
on Saturday. This is May. 31st
Oh, you're
is
right.
Saturday.
You're right.
June
Okay.
1st.
Oh, yeah. So I was right. Okay.
Yeah, you're just looking at the wrong month.
Yeah. Okay. I,
Okay.
I literally I said I think it's on a weekend. You're like, yeah, and I'm like, no, look, it's just Tuesday. Yeah. All right. Sorry. My
Yeah, so
fault. I was wrong.
they might do it on a Sunday. I don't know. Yeah.
No, but if yeah, I think they would. But can you imagine? Like, I mean, not could you? Like, we're going to be there in less than a week. Imagine what the market's going to open like on the second.
Yeah, yeah, yeah. And I do think that there will be some kind of an announcement this week giving us some clarity on what to expect. But
Yeah,
they got SpaceX today, so that'll be the big news for today.
I know we missed the launch, didn't we?
I don't think so. I think I checked just before we went on. They hadn't even got the music out of the way to let that
Yeah,
do.
it's up.
Oh, it's up. Okay,
Yeah,
so far so good.
I guess I see it flying.
Okay, that's good.
Yeah.
Let's close it up so I can put this video up, and then I'll go check out what's happening with SpaceX.
All
Uh,
right, sounds good.
yeah, thank you, Nicholas, as always, for coming on and keeping me honest. I think
Likewise,
it's
I
been
think.
great. It's been great talking to all of you.